Hello, this is Japanese Economic Review Channel. Today, we analyze the Bank of Japan's May 2026 money stock data. The key takeaway is the spring 2026 liquidity acceleration. Broadly defined liquidity, or L, reached 2,334.5 trillion yen, marking a 4.7% year-over-year growth. This expansion is driven not by traditional bank deposits, but by massive capital inflows into non-core investment vehicles like trusts. Let's explore this structural shift. To understand this shift, let's review Japan's liquidity structure. At the core is M1, highly liquid cash and deposits. Next is M3, adding time deposits and CDs. Finally, L encompasses M3 plus the broader investment layer, including pecuniary and investment trusts, and government bonds. The recent dynamics show a stark contrast between the stable inner layers and the rapidly expanding outer investment layer. Looking at absolute volumes, traditional M3 still dominates at 1,642.4 trillion yen. However, the total L stands at 2,334.5 trillion yen. The roughly 692 trillion yen gap consists mainly of pecuniary trusts at 488.6 trillion and investment trusts at 123.8 trillion. While M3 forms the foundation, the sheer scale of these peripheral investment assets is what's driving current market momentum. This chart highlights the spring acceleration. While M3 growth remains stable at around 2.2%, L decoupled dramatically. Broad liquidity surged to a 14.4% annualized growth rate in April and sustained a high 13.0% in May. This growing spread clearly indicates that rapid liquidity expansion is happening almost entirely outside the traditional banking system, within institutional and investment-grade assets. Let's look inside M3. We see a clear stagnation in highly liquid assets. Currency in circulation contracted by 1.1% year-over-year, continuing a negative trend. Ordinary deposit money remains flat at a mere 0.4% growth. Conversely, quasi-money, primarily time deposits, grew by 5.0%, acting as the main growth engine within M3. People are locking away cash for better returns, even within traditional banking. The real story lies beyond M3. Surging capital flows into trusts are the root cause of the liquidity spike. Pecuniary trusts accelerated sharply, growing 12.9% year-over-year. Investment trusts maintained consistent double-digit growth at 11.9%. Note that while commercial paper shows a massive 495.6% growth, its volume is just 0.1 trillion yen, a mere statistical anomaly, not a systemic driver. In conclusion, this matrix isolates the true macroeconomic drivers. Ignoring the statistical noise of commercial paper, the high-impact growth engines are clearly pecuniary trusts, investment trusts, and quasi-money. Meanwhile, cash and ordinary deposits lag behind. This visualizes a profound structural shift. Japanese capital is moving at scale from stagnant core accounts into yield-seeking institutional trusts. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.